This is the briefing for Friday, March 18th. Well, today's trading really didn't do a whole lot more than what we saw in yesterday's trading and yesterday's briefing. The only difference today is that I expected a lot more volatility with option expiration Friday, and we really didn't get that. We got a big spike in volume right at the close, just as the closing bell went off, which is typical. Now, this is the spiders on a 120-minute chart. And you can see the rotational pattern that the indices have been in, going all the way back to the 17th of February, where we broke through this support level and then have spent the rest of the time in rotation. Now, in yesterday's trading, we traded right up to resistance at 440 and then broke through that in today's trading, testing this 445 area. Now, a lot of things are happening here, and there's a lot of possible strategic analysis that we can give to this. The real thrust of or crux of the matter, I should say, is the fact that we have reached a really important area of resistance at 440 in the spiders. Now, reaching that and breaking out is one thing which suggests that we're going to continue this rally and test the 460 level, which is the next level of resistance above 440. But I was doing a little bit of searching today and came up with another possible strategic outlook. And one of the reasons I did this was because I don't like what's happening with the internals on this move here. And if you take this low here and you subtract it from that high, then you add that to this low, you get an equality where this is a leg 1, this is leg 2, and this is leg 3 that comes in at 445, exactly where we ended up in today's trading. Now, the two possible strategies are basically that this is a counter trend rotation, which it certainly appears to be in terms of this pause. But the second would be that this is a counter trend rotation, or a formation of a bottom, and we're breaking out to the upside. So the crux of the matter is either we're going up or we're going down. Now, and what we need to do once we understand that is to look for other information the market can give us that would give us an indication of the higher probability of one event occurring over the other. Now, we've reached this 445 level, and if that holds in Monday's trading, that could be significant, but even more significant would be trading below and closing below 440. That would suggest this is a false breakout based on option expiration Friday, and we're going to see rotation back through this range. So watching what happens with price development on Friday is going to be very important. We may get a trade or trade above 445, but if the internals do not strengthen, then that's going to suggest another false breakout on a shorter term time frame and rotation back through this range, then a test of 440 and rotation back down to the 430 area, which is the next level of support in the spiders. Now, the reason I'm cautious on this move and looking for, or I guess I shouldn't say looking for, but not putting all of my eggs in the long basket of this market at this point in time, is what's happening with the internals. And the internals, you can see there's a pretty good divergence in market breadth. This is NYSE breadth, yet we've had higher prices, but the internals of the market are declining, and declining pretty dramatically. Looking at where we are in the NASDAQ, you can see the NASDAQ is in this same area of rotation. I didn't do the numbers. This looks like it's pretty equal here. If you take the length of this leg here and add it to this leg here, it's going to be equal right about this 350, 351 area. So you can see that the NASDAQ is lagging, so there's an intermarket divergence here, which also suggests that there's something not quite right. Now, normally if we get larger intermarket divergences, they weigh more on developing a strategy, but this intermarket divergence is not that great since the S&Ps or the spiders are trading just above this important support level or resistance level. So it's going to be important to see what happens on Monday with the Qs. Now, the Qs are at resistance at 350. Next level of support comes in right around the 335, 336 level. And you can see the same thing in NASDAQ breadth. It is absolutely just declining. So we're not having more companies' shares begin to increase in this rally. More and more of them are beginning to decrease. And at some point in time, unless that changes, that's going to weigh on the indices. Now, it is always important to analyze price development, but we always want to know how strong is that development. And we can see here that while price development is higher, the internals or the strength of this rally is declining and declining pretty dramatically. And I'll get to that in just a minute. Looking at the Russell, you can see the Russell really been in this area of rotation going all the way back to January, really not having gone anywhere, and now testing its upper extreme, comes in right around the 208 to 209 area. Same thing as with the Qs, it is lagging the spiders, and support comes in right around 202 in the Russell. And you can see this is NYSE breadth, not Russell breadth, so keep that in mind as well. Now, looking at where we are in terms of the daily chart, you can see this three-step move that would come in right around this 445 level, where we would see or actually have a potential resistance here. But what's occurring here, and this is what's really most dramatic, and I pointed this out in the intraday briefing this week, is that volume is falling off and falling off pretty dramatically, and even in today's trading. Now, looking at total volume, we did get a volume spike because of option expiration at the close today. But if you look at the individual indices, what's trading in the ETFs anyway for the spiders, you can see that volume is falling off. So basically, two things are happening. One is we have fewer and fewer companies making up the S&P that are moving higher. In fact, more are beginning to move lower as opposed to higher, and we are not attracting new buyers to this rally. So that gives me concern. Now, if I change this to the Qs,
strategy alert,
you can see the same thing is happening. Here's this three-step counter trend move that I talked about earlier, coming in right around the 350, 351 area, but volume in the Qs falling off and falling off pretty dramatically. In fact, I can tell you that between yesterday and today's volume in the Qs, really a pretty good decline in what we're seeing. Looking at the Russell, you can see the same thing happening. Here's the rotational pattern on a daily basis. And you can see what's happening with volume in the Russell. Volume in the Russell is absolutely collapsing. Now, keeping in mind that the internals can always correct to support price development. Typically, that happens around a news event. But the higher percentage of time, the price will correct to the internals. In other words, the internals will signal the fact that something is not right within a trend, and therefore the price development will eventually correct to what the internals are signaling. The small percentage of time, the internals will correct to price, but that typically is around a news event that changes the perception of value, that brings in more volume, more buyers or sellers, depending on the direction of the trend. And you'll see that in market breadth, either increasing and strengthening to support an uptrend or decreasing to support a downtrend. And so far at this point in time, what the market is telling us, at least with the information as of the close today, that this is a very, very weak rally. Now, if we look at what's happening in terms of the overbought and oversold condition of the market, you can see that we reached the point of being extremely overbought in the NYSE. This was yesterday's trading. This was Wednesday's trading. And then, of course, we worked off some of that because market breadth was declining over the last couple days. Same thing is happening in the NASDAQ, went from extremely overbought to overbought. But what's more significant here is this indicator has converged. And you can see all three time frames, and I went through this last night. The yellow time frame is a short-term time frame. The blue is an intermediate-term time frame, and the purple is a longer-term time frame. So if you keep in mind two things, one is that looking at the longer-term time frame, you can see when the short and intermediate-term time frames reach a level of being overbought. And those of you who listen to these briefings know that this is a pretty reliable indicator. Nothing is 100% in trading, but it's a pretty reliable indicator. You're going to get some type of pause or some type of counter trend rotation, depending on the direction of the trend. But look at the purple line, the longer term indicator. It has reached a point of being extremely overbought that it hasn't reached in quite some time. Now, I think we can go all the way back pretty far, and you can see that it has not reached that. Going all the way back to the beginning of February, it has not reached the point of being that overbought until this week. The other thing is that the indicators are converged, which has suggested to me in the past that the market is tightening. Something is happening within the market, and typically you're going to get a breakaway in one direction or another. Higher probability of the time, this doesn't give us the direction of the break, but it tells us the higher probability, if it's overbought, that you're going to see a move to the downside. Now, we are overbought, but not extremely overbought. So it doesn't preclude the market from going higher on Monday or Tuesday's trading, but this gives me a little bit of concern that we could see some type of move back to the downside in Monday's trading. And then, of course, we have the weekend, and anything can happen geopolitically that can change the perception of value on the part of traders coming into Monday. The same thing is occurring in the NASDAQ, and you can see the NASDAQ breadth that this longer-term indicator has reached a point that it has not reached in quite some time, which tells me that if I had to weigh all of the probabilities of one event occurring over another, I'm coming into Monday with a lot of caution. It does not preclude the market from beginning the day higher, but when we see what happens with the internals, if they don't strengthen to support price in this rally on Monday, I should say, then the risk of some type of additional move to the downside or a pause that works off this extreme overbought condition is a higher probability. Have a great weekend, and this will be an interesting briefing on Monday.